on residential real estate and land prices, but that can also impact stocks and everything like that too. So I share this with you just from a longer term perspective, just so you kind of know where we are. We should actually see one kind of last, in asset prices, but also if you're thinking like in real estate, if there's properties that you have, they're investment properties that you want to kind of sell, now's the time to do it. And then if you're thinking of buying something, wait. Like you'll be able to get some great deals in 2029 through 2031. Just like the best deals to buy real estate more recently was like in 2010 and in 2011. Okay. So anyway, bigger picture, just stuff to think about, all the things. All right. So last time we talked about these bigger cycles, and how that the last one kicked off in Q4 2007, and then now Q4 2024 is kind of when that comes into play again. And when that happens, you're typically looking for a 20 to 25% correction in equities, which is absolutely what happened. Okay. And once you kind of get that correction, then kind of these smaller term cycles kind of set up. So what I like about this stuff, and is I find that this is where the best larger trading opportunities can be found because they typically catch most traders off guard. Now, one of the most interesting of these is known as Haddock's cycle progression. And one of the benefits of just kind of being out there in the investing world is I get a lot of great institutional research for free. They just like, hey, you send me your stuff, I'll send you your stuff. Like, awesome. So I learn a lot just from seeing what other kind of institutions are following and what they find interesting. So that's the part I think is kind of fascinating. So this whole thing is a proprietary analytical framework developed by Mr. Eric Haddock. He's a market analyst known for integrating cycle theory, Elliott wave GAN, and other forms of technical analysis. Okay, and this is and so that's just kind of the basis of it. But it's also kind of brought in with some rolling timing. That's the part that I get interested. These cycles, they take place. Oh yeah, that was awesome. Let's go back into that. That's the danger of having a mouse with a little rolling thing there. Okay. Da-da-da-da. So what I found is that these typically take people by surprise, since it often means an abrupt reversal of the current trend with zero signs of kind of technical, like a technical setup. It just happens. So what I want to do now is, thanks, is look at some current examples. So this was a trade I recently did in the trading room, and a couple of people thought like, why are you doing this? But for the last 6 to 8 weeks, there's been this cycle high projected in the gold market for the week of April 22nd. And so when we rallied into that, I was like, all right, I've been kind of following this stuff. And when it happens, and it doesn't happen very much, I want to do some trades on this. And so I posted this in the room and said, all right, we're going to buy some put debit spreads on GLD for May, and then also sell some call credit spreads on this because of what's setting up. And then literally kind of the next couple of days we fell, and then we were able to get out of almost a double on the debit spread, and then on the credit spread, which we sold for 420, we're able to buy it back for $1.65. Now there was zero technical things here going on, right? Just because something's high, like, oh my God, this is too high, I should short it. That's like the worst way to trade. Just as if it's too low, I should buy it. Things can keep going lower, things can keep going higher. But when it does that into like one of these short-term cycle highs, it's actually a pretty good risk to reward ratio. And those are the kind of things that I'm looking for. So, and this is kind of, what it looks like on, the progression. So you have these larger term cycles that happen like this, like those are the 17 and 18-year cycles. And then within that, you have these kind of smaller, smaller cycles. And so that's what I'm looking at. Bonds are interesting because they have this pretty awesome kind of 9-month cycle that I like to follow. And then, well, let's just look at that. I think charts are way easier to look at. So if you're looking at kind of this 9-month cycle in bonds, what happens, and this is also TLT. So you saw a high in April 2023, and then another high in December 2023, another high in September 2023. So guess what? That projects another high into June 2025. All right. So right now, I am long the July $90 TLT calls, which are about $2.60, pretty cheap, with the expectation that we're going to be able to go, and I don't know exactly like where it could go. Like, for projections, you can do Fibonacci, all that kind of fun stuff. Just that based on this, there's a tendency, there's a high probability that this should kind of rally into June. Doesn't mean it's going to go straight up and all that kind of fun stuff, which is why I've got July calls instead of like buying futures, which can kind of freak you out because they can have big moves and stuff like that. All right. Now, even better is you can dial down into this and say, all right, within that, those 8.5 to 9 month cycles, what you also get is this tendency. The last 4 out of 5 months is that the tendency is that bonds peak during the first 5 to 7 trading days of the new month. So here was December 5th through 6th, February 5th and 6th, March 5th and 6th, April 5th and 6th. And so in looking at that, we're also looking then at June 5th and 6th, July 5th and 6th, or May 5th and 6th, June and July. So the idea is that we would stair step up into those dates with highs happening at the first part of the month and then coming down and then building back up for another rally into that. So these are trades I'm doing. I will post. You can do them with options on bond futures. You can do them with TLT, but it's pretty reliable and it's kind of outside the norm of kind of the trades that we do. But what I like about this is that it's not something that necessarily a lot of people are looking at, and it's a great kind of source of income while you're trading other setups, that are doing that. Yeah, now some of these do line up with squeezes, which is great. But what's awesome about this is if you know that there's a squeeze and timing, for like say a projected high or a projected bottom, then you can kind of use those together. They're pretty powerful. I have seen I have seen times like when a squeeze, like, wow, geez, I wonder why that squeeze didn't work. And it was because there was a cycle right there where this market was going to top. It was planning to top right there. So I'm the first one to say, like, look, I don't understand how this stuff works. I just have watched it long enough to say, like, it works consistently enough that it's worth a trade. It's worth understanding. It's worth knowing about. So this happens across all asset classes. So for now, according to these cycles, and I always back this up with like technical analysis and stuff like that, stocks are set to rally in the May 5th through 7th. Now we saw some pretty big rallies. Obviously today the markets are down a little bit after Apple and Amazon, they kind of puked a little bit. But according to these cycles, we still have the possibility of decent upside into early next week. And then you have a natural kind of a potential for a high that could last for a week or two. But for now, for all practical purposes, that we're trending higher for the next several months. Like we've put the bottom that we hit should be in place for a couple of months, right? So, and we've seen that the markets look like they're going to puke and there's buyers that are coming in and no matter what the news is. So the 17-year cycle, we got that 20 to 25% projected decline in early April. That was the hard bottom, as they say in Boston. And there we go. We'll look at some charts too. So gold also setting up to continue lower after accelerating to key cycle highs, but then looking for a new bottom about the third week of June and then a rally into November. So if you're long gold here, you got to be careful or make sure that you've got some calls that are much further out so you can kind of weather this natural cycle progression where it kind of comes down a little bit, bases, and then forms a new high. That's a lot different than, oh my God, the headlines are bad, I got to buy gold. This is something like, this is the natural flows of how this stuff kind of works. So for stocks, if we're looking at, so what's interesting here is that the Russell actually tends to be the most accurate, which is kind of interesting. So the Russell 2000 tends to keep the most synergy for these kind of price moves. And in this case, it's projecting kind of a target on this cycle high up to 2100 to 2130, which on the RUT, which is about 208 in the IWM. Right now, that doesn't mean it goes straight up. We can go back and forth and all this kind of stuff. But what I found is there's a tendency for this stuff to play out. So I like the idea here of buying some calls on IWM for, say, July, and then just using that as just kind of a separate swing trade, maybe some writing some shorter term calls against it, but just kind of letting this play out. And, this stuff has worked enough that I've learned to ignore it at my peril. Like there's definitely times I'm like, there's no way that's going to happen. I'm like, okay, all right. So I want to know what it is. I put these lines on my chart just to know when it's coming up. So the dollar this is one I watch a lot because the dollar impacts so many things around the world that it's really, really important to see what is happening there. So the dollar was set to peak in November of 2025. Okay, now we got to sorry, cycle high in January. Okay, so you can see here we're rallying, we're rallying, we're rallying. Oh my God, these tariffs, what's going on here? And sure enough, we get to January and we peak, and then it's set to drop into November of 2025. All right, so we're just kind of chugging along here. And in terms of the short-term stuff, looking for like a dead cat bounce into June. No offense against cat lovers, because I have two Maine Coon cats that I've grown very fond of, and then looking for kind of a sell-off kind of puke into November. Now, I like that because it just kind of gives me a sense of the dollar is like a huge asset class, right? And if we kind of understand the flow, which way that's going, what does that tell us? Well, the dollar going lower tells us that financial liquidity conditions are financial conditions are going to get less tight, right? The dollar falling down is typically good for other assets like stocks and like gold. And it just drives so many things. It's so important. Even though I never trade the dollar, you can trade like the euro, but like UUP is the ETF of the dollar. It moves like 4 cents a day because it's so small, but it moves so many other assets that, it's a great indicator. And I think it's important to know. Gold is another one. We got the cycle high that hit in that kind of the week of April 20th timeframe, and essentially looking for heavy selling into next week. So if you still want to short gold, you can. Then looking for kind of some back and forth, but then also strength into November of 2025. Okay. And that's just the cycles. And you can see kind of how it plays out. And it's great when it lines up with a squeeze, even better. Bitcoin also follows these cycles really well. And at this point in the cycle, Bitcoin is looking to retest those highs. And then from there, just kind of chill out a little bit. So that's kind of what's going on with Bitcoin. And that's something that, when I started watching some of this on Bitcoin, I was like, why are they even posting this on Bitcoin? It's not going to work on Bitcoin. It works on Bitcoin. So that's how crazy all this stuff is. And so I always like to see what those are. All right. So what I like about this too is when they come up is you can actually do some pretty uh, big, essentially big potential payoff for low risk. So like out of the money debit spreads, butterflies. So this was something we'd posted in the room. I bought the 5,300, 5,350 call debit spread on the SPX for $14.30. And then we're able to sell it for $46. It was a gain of 221% over like 3 days. Okay. And that's the kind of stuff that's kind of nice. The butterfly, this was one that we'd set up, and it was a $100 wide one. I forgot exactly where we got out of this one, but it was one we were able to ride for a little bit. But again, the nice thing about this is that you can set it up where, you're not buying a bunch of deep in the money calls where if it goes against you, you get hammered. It's something that can actually weather the back and forth while you're waiting for this to play out. And so I like that because you can actually set up a lot of what I would simply call asymmetrical risk trades when these things set up. All right. So we are at a point where global liquidity must rise to service the debt, which would in turn push stocks higher. Okay. So the things that you can monitor for this is the global money supply that's printed. We're at record highs right now for the global money supply. Stocks typically lag that by 10 to 12 weeks. All right. So that also lines up with stocks kind of, rallying here into the summer. So all of this sets the stage for risk assets to rise. Now, this doesn't mean that, we're going to go up and make new highs and everybody's going to hold hands and make money. It just means that the idea that, the market's going to zero is overblown. People were really, really scared. And in fact, it's only the fifth time in history that the AAII number, which measures bullish and bearish, fifth time in history that we got to 60% bears. And every time you've gotten to that level, it was a bottom. So keep it in mind that the news and reality are very rarely are related. And last but not least on this is that the NASDAQ and Bitcoin. So the best way to kind of hedge your wealth against an eroding dollar, the eroding purchase price of the dollar, is the NASDAQ, essentially tech stocks and Bitcoin. They have about a 90 to 95% correlation with global liquidity. Okay, what happens as global liquidity increases, the purchasing power goes down. And the way to kind of essentially have your any assets that you have essentially accelerate at a faster rate than the loss of your purchasing power is to be exposed to tech and to Bitcoin. Now, Bitcoin can also include other crypto, but I look at shit coins and altcoins as more speculative, and Bitcoin is the kind of the tried and true way to essentially, there's ETFs now, it's established and all the fun things. All right. So in the short term, a key date in the near term is May 5th to 7th, looking for a lot of moves into that, stocks and bonds up, gold down, and then kind of a pause in that. From there, some back and forth until the next key dates line up. And as these key dates pop up, I will post these in our newly revamped main trading room. So yes, trading room. So what room am I talking about here? So this is a trading room update. So for those of you that have been with us for a while, first of all, we appreciate you. You may have noticed that over the past year or so, I personally have pulled back from the trading room and generally stopped having sessions on the mic. And to make a very, very, very long story very short, this is especially the options part of this. This was something that I've been doing for a long time. At some point along the way, met Henry. He started helping out as well. He became a partner. We built with this great team, built up this company. It grew and grew. We're having a lot of fun. At the end of 2021, we were approached by a couple different private equity firms and agreed to sell them the business, and of course retain kind of a minority share. Now, when that happens, if any of you have ever had a business and you do that, you know that things change. You don't think things are going to change, but things change. Things changed. To make a long story very, very short, as of 3 weeks ago, I ended up buying it back from them. And by buying it back from them, that kind of alleviated at least a lot of the frustrations that I was experiencing, and then allows me to feel much better about kind of diving into the room, getting back into trading kind of in public and doing all that fun stuff because, we kind of have say now in what we can do. And it's so incredibly frustrating to kind of understand and know what you should do, but be in the minority and just kind of have to sit there and watch. So anyway, I'm super excited about that. We're kind of going back to our roots. We're able to do things that I think make sense, for us, for traders, making this fun again. And, let's do stuff that actually, make trade. So we got the saying that we have here now is, let's see, is make simpler fun again. So that's kind of our motto for the next couple of years as we kind of, navigate all this fun stuff. So anyway, if you guys have been through anything like that, or if for some reason any of you have a business that you're contemplating selling, feel free to reach out to me. I have a master's education now in selling a business to a private equity firm and then buying it back, and happy to help out anybody that happens to be going through that process. It's like a trade, right? So luckily from trading, you learn a lot also about being comfortable, being uncomfortable, for lack of a better term. So insane stuff. Insane. Okay, so while it was all well-intentioned, at the end of the day, it wasn't a fit. And at one point, I really seriously thought about retiring and trading on the beach. But I really like and value this community and the team, and I love what I do. Financial independence and freedom just unlock so many doors, and it's so fun to help people towards that goal. So here's what I've been up to this year, and I wanted to share this. So at the beginning of the year, and of course, you guys know I've kind of, I'm not risk adverse, and I've certainly had my share of kind of big trades. But I've really kind of gotten dialed into let's wire money out consistently. And so this was an account I set at the beginning of the year with the goal of, I always pick Fibonacci numbers. And so I thought, okay, well, out of this, could I wire out, $78,600 a week from this, and then use that for other things like travel. I've got zebras, buy zebra food, invest it in other assets like, Bitcoin and gold and real estate and stuff like that too. And so this is my bank statement. And what I do is I just set this up as an auto wire. And so I started this off. So every week, 786, 786, 786, 786, 786. I meant to then change it to 50, another fib level. I guess I accidentally did it at 10. So I got to change that. But the idea with this is that by setting this up to automatically wire out of your account, it's like you got a VIG coming up. Like you gotta pay Vinny, or he's gonna come break your legs, And so it's kind of setting up trades in such a way that and it's not as simple as, oh, okay, I need to make, X amount a day, because each day is going to be a little bit of different, but it does kind of tie in your goals and your risks, and it brings a discipline. It brings a systematic approach to what you're doing. And that's what I really like about it. And so that's the part that's cool. So yeah, and it's great if something can tee up and I get this big trade, but that's not what I'm going for. If there's some super unique situation, that's great. Now, while all this stuff was going on in March and the markets were tanking, I was on Zoom calls all day with 4 sets of lawyers. And so that was super frustrating. And it was hard to trade in that kind of a situation. So that also really drove me towards more systemic kind of things where it's like, okay, how can this stuff also kind of be done automatically? And those are things that I'm working on as well. Thank you. Yeah, I feel like it's a welcome back because man. All right. So what kind of trades am I doing in the large account? First the classics, what I like. This was a trade we just did in the CME. You got the squeeze, you got new 52-week highs, you got a nice little consolidation here. You get in and boom, as you get toward the 1272 extension, you get out. On this one, now on the large account, I'm typically doing anywhere from 50 to 100 contracts. This one, so I also earmark some of them if I do them in the trading room. I typically earmark it as 10 lots. I don't like posting 100 lots in the room because then everybody's like, oh my God, you got a lot of conviction on this trade, so I'm going to go all in too. I'm like, no, it's normal trade. It's a normal trade. But that was nice. We were in this for like a week and a half, got 70%, we're out. And so even though I'm trying to, make a weekly goal, which kind of ties into a daily goal, I'm not just day trading. I like to do maybe 1 or 2 day trades, but it is kind of like, all right, let's sit in these trades. And, if there are, potentially hedge if we need to, and all that kind of fun stuff. And there's also certainly a focus on SPX, 0 DTE, and 1 DTE. For those of you that don't know, there's a huge tax savings here. You get a blended tax rate of about 27% when you trade SPX and NDX and other of those contracts because they're like 60-40 split, versus otherwise you're getting taxed at your highest bracket. I think the highest bracket is 39.7%. So if I trade Tesla and make money, I'm going to get taxed at 39.7%. If I trade SPX and make money, I'm going to get taxed 27%, unless I finally just convince my family to move to Puerto Rico, and then I would be paying 4%. And there are definitely times when it seems like that would be a good idea. So on something like this, same thing, out of the money, call debit spread, and then kind of a smaller one, a little bit higher probability. You buy it at 4, sell it at 1070. That's real money. I can wire it out. Butterfly. So kind of a mix of things like that, and then sometimes as well doing some hedges as well. Yeah, no, I do have friends that live in Puerto Rico, and there's definitely pluses and minuses, and just the idea of like things like electricity, hurricanes. But yeah, sometimes when that tax bill comes along, you're just like, man, that would be nice. But anyway, that's a whole nother discussion. Also, some directional trades. So sometimes you get these kind of setups that tee up. This was, Meta, and not a huge, not like a 40-point move on the stock, but it was a very clean move. And so just set up some larger trades and looking to catch like 5 points, and that adds up, right? If you do like, larger size and catch 5 points, it counts, right? And so those are the things that I like to look at as well. And so on Meta, on something like that, there's something like David and Henry are huge drivers of the voodoo lines. I always pay attention when something slams, like pukes into a fire line, because that almost always holds. And so when you get something like that, I'm kind of looking for that dead cat bounce. And then when you kind of, you get to that 1 ATR move, take a lot of it off, and then see if you can trail some up to the 21. And that's actually a really great trade. Obviously, my favorite trade is going to be more like, oh, here's a squeeze, let's grab this, and oh my God, like those are amazing. But I like these flushes, and something, a concept I learned when I early on in my trading career, and anytime I forget this, it's to my detriment, is that another person's stop loss is your ideal entry. And so you look at stuff like this and just think of, who's getting hammered here, who's getting margined out, and that's when you want to get in. And so, it's kind of looking at it from that perspective. Okay. And then also in the room too, I'm still a fan of old school TradeStation radar screen. Something, you get the daily chart, what's squeezing, what's testing the 21 EMA while in a squeeze, where is it in relation to its range and all that kind of fun stuff. And those are things that I look for and that I'll post. I just took this today so we could get a sense. And you can see though, even though we've been rallying pretty good, the only sector that's positive, meaning that all the moving averages are stacked positive, is XLP. Everything else is still a mixed bag. It's certainly tradable, but this is a far cry from, not too long ago when all this was green across the board, and you could certainly buy the dip without hesitation. Okay, so for the first time, so I've got some, I think you guys will like this. So for the first time, I'm going to start sending out alerts for my large account. The good news is if you are already a member of Simpler Central, that's where I'm going to post them. So I'm kind of starting a service, but if you're already in Simpler Central, you don't need to sign up for it. It's kind of going to be included in Simpler Central, which we're renaming the Mastering the Trade Room. And the reason we're renaming it the Mastering the Trade Room is that a lot of us kind of got started with some of the basics like that. Like, let's look at the squeeze and let's do this. And we would have people say, well, I joined your room and I don't see you doing anything you talk about in the book. So it's like, oh, okay, well, here's an easy thing. Like, let's, and it's a good example, like Henry, Danielle, I mean, Raghi, everyone, we all have our different styles. But, for some of us, it's like we formed a basis on cutting our teeth on things like the squeeze, right? And then you branch out and you kind of make it your own. And that's what's so great about this. So you have, and and there'll be different things like if it's supply and demand, then it's like, okay, Trendy John, that's like, let's see what he's doing there. And if we're looking at really dialing into swing trading and sectors and things like that, in macro, you got to look at what Raghi's doing. And so everybody kind of has their own kind of different niche like that. And it's really kind of looking at a room where we kind of incorporate that, where if you come into this room, you're going to be exposed to the things that kind of, at least where some of us got our start, and try to keep it simple, but really focusing on, actionable alerts. Like, this is what we're doing. This is what we're doing with our own money right now. And sometimes that means nothing because cash is a position, but no matter what's going on in the markets, and it's going to be a crazy couple of years, just having a team of people really focused on that, which is great. So I think that part's cool. If you're not familiar with our trading room, then this is what happens is, this is Taylor, I think from today, maybe. We'll share our screens live. You can ask questions, and then we'll post alerts here. I had a trade on Netflix, and exited that out, and we closed that one, and then this one did not work into the close. So we post everything. We're not hiding trades that don't work and stuff like that too. It's real life. And these are the current trades I have for my trading room. These are all things that I've posted. I've gotten, a lot more kind of, I don't think aggressive is the right word, but more engaged. Like, let's do this. Nothing too crazy or anything like that. But again, I'm just trying to make my weekly goal. And in this market where it's been so crazy, certainly kind of dialing back position size and things like that too. So what I'm excited about is we are getting back to our roots. We're relaunching Simpler Central as the Mastering the Trade Room. I'm personally getting back on the mic, getting engaged, regular sessions. For all the things I talked about before, I just reached a point where I couldn't do it anymore. It's hard for me to do something if I can't look myself in the mirror and say, this is what I want to do. And for a while, it was kind of like that. I'll be posting my large account trades in that room with a focus on weekly wires, the occasional big trades. And again, if you're already a member of Simpler Central, awesome. You don't have to do anything. Welcome to the new and improved and enhanced trading room. And I think you're all going to like it. Now, if you aren't a member, this is your chance to kind of lock in. We're going to kind of do over the course of the next week, just kind of hold kind of an introductory rate for you that you can lock in before it goes back up again. And look, this is you want to be on point for what's going to be a crazy couple of years in the financial markets, because it is going to be a doozy, and you want to be prepared. You want to have people with different points of view. You want to have the trading experience of people who have traded through the dot-com crash in 2000, the 2008 financial crisis. Dear God, what happened with COVID? These are all things that are old hat. We've been through this. We've seen it. And so whatever's coming down the pipeline next, we're going to be ready for it. So the Mastering the Trade Room, you're going to see different groups that go through there. I think you guys know everybody here. You've got Henry, Danielle, Raghi, David, Bruce, Lorna Bot, Taylor, Sam, everybody, Neil, Chris. And it's just a great group, and different time frames that we're looking at, different points of view, and that's what makes it so great. So the idea with this is inside the room, you're going to get live trading throughout the day, plus alerts. I'll be posting my large account trades. If you're working full time, and trying to learn how to trade, which is what I did, you're going to get alerts on, you can get alerts on a mobile app. We got a lot of folks that just sit there during the day. They get the alert, I look at it. Yeah, cool. I'm going to take it while they're in a meeting. That's awesome. Daily videos that recap everything. There'll be a learning center and a simpler insights newsletter with recaps. So it's a really awesome kind of a, if you want to feel like you're in good hands over the next couple of years, this is kind of it. So what we're doing here, and again, if you're already a member of Simpler Central, congratulations, you don't need to do anything. There's a couple of things that you'll probably want to hear about. Now, if you're not, what we're going to do is kind of a basic test run for $97, and that's for 1 month. Okay, $97 for 1 month. Now, that's not the and then it'll renew at $197. Okay, so just so you know, don't want to try to do a fast one here, but this is kind of like, hey, for 97 bucks, you can come in, you can kick the tires, you can ask questions, and after 30 days, if you're like, you know what, I got it, I don't need you people anymore, awesome. You can go on your way. If you want to stay, it renews at $197, and with this, you'll also get a copy of the Mastering the Trade Psychology class, so you kind of get your arms around that. In the Mastering the Trade room, again, you get the alerts, you'll get my account trades, daily videos, the simpler essentials, the premium newsletter, and then the mobile app alerts, which is pretty awesome. And now if you're looking at all this going like, okay, this is awesome, I'm in. If you want to get a slight discount, you can do quarterly, $4.97 for a quarter, and all the things there. And then finally on the elite one, the elite one's kind of cool because it's an annual package. Again, more of a discount. You can lock it in for a year, but you can get a copy of my book, which I know doesn't necessarily tie into that because, you could also get it on Amazon for like 40 bucks. And I'll sign it, which means then it's worth $40 still. It's not worth a penny more. But you'll get to lock in kind of that lower annual rate. If you're a Simpler Central member and you have a higher rate, just call us. We'll take care of you because we can do that now because we're not owned by a PE firm. And then the other thing about this is that we're launching this Mastering the Trade University, which is 11 in-depth classes on the Mastering the Trade concepts. Okay. This is also included in this. Now this will be $9.97 for people that, don't see this and they'd like to do it when we launch it because we're going to launch it. And, but that's something that's included. Now, if you're going to do basic or pro, you will get the first module of this for free, which is kind of the psychology and the squeeze. If you're interested in all 11 modules, then it might be interesting for you to look at the elite package because then you're tied in for the rest of the year. I think it goes into 2026 actually for when we do that. So I think it's pretty awesome. And again, just kind of want to, if you just want to kind of lock in and get locked and loaded for the next year, even if you're a beginner, it'll kind of get you set up. So quick review of a couple things here, and then we will answer questions and all that kind of fun stuff. So the psychology class. So this is one that's included for everybody, whether you do kind of the first tier, second tier, or third tier. I think you've got to understand psychology. If you don't understand the psychology, that's what's going to be to your detriment. And you'll see traders on here that are now, extremely disciplined. They've got their strategy, they've got their game plan, and they follow it. And really, that's the key. There can be some nuances with things like, okay, the internals are doing this, so I'm going to do this. But you've also got to understand, like, okay, how much risk you're going to take and stuff like that too. And really, where traders get self-sabotaged is, we've all got our experiences from childhood that were hardwired in that we may not even be aware of. That's what comes to get you. If you go in and you're kind of shooting from the hip and you don't really have a plan, that's the kind of stuff where, these emotions will kick up. Oh, I'm not good enough. My mom said this and blah, 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 whatever. We've all got our things that will sabotage you. It's guaranteed. There's few guarantees in life, but it will sabotage you. And so the idea is you learn about the psychology, you put a game plan in place, and it can override it. And so I think it's critical that everybody gets exposure to that if you haven't already. And look, I listen to Mark Douglas's book on Audible every year, and every time I get new insights. So it's a never-ending, unfortunately, it's a never-ending learning process. I say unfortunately jokingly, but it's actually fortunate because it keeps you on your game. So, and again, so the Mastering the Trade University, which is included with the Elite package. And again, if you want to do this separately, it'll be $9.97. But again, if you're doing the Elite package, it's included. We're going to go through the Squeeze Pro, precise entries, scalper alerts, 5-star setups, market internals, the reversals, the 352 play, all the things, opening gap play, macro analysis, risk control, trading plans. It's going to be great. And it'll be over the course of like the next 12 months. So that'll be pretty awesome. We'll have a kind of a set room schedule. Now, look, I'm the first one to say that I do travel and take some trips. For 10 days in late June, I'm going to be going to Alaska with my family. And potentially, I think in late July, early August, we're also going to go to kind of Singapore, Bali for like 2 weeks. So during those times, obviously, I won't be in the room, but otherwise, I will be, I'm locked and loaded. I want to trade. I've got my plan over the next couple of years. We're not traveling a lot. My youngest is still, he's locked and loaded in school, and we're here to make sure that that's set up for success and all that kind of stuff too. And in the meantime, I like trading, and so I want to do that a lot. If you're not familiar, we also have a mobile app, and in the mobile app, what's great about this is that it will show, oh, there's the schedule, here's the alerts. Okay, cool. I'm driving down the road. I got an alert. I can pull over and I can put the trade on my mobile. You can actually watch the sessions from your phone or your iPad and stuff like that too. We do have clients that'll, they'll have it on their, they'll have their earbuds on at work and they're listening to the room, and they can do their work. They can, they can do both. They can two-step, which is great. So all the good stuff there. Um, and and what's great about the trading room too is, so the first thing I like about it is the community. So we got a group of awesome traders in there, some great traders. They help answer other people's questions as well. And it's like human AI, because we can't all look at all the things all at once. And some of my best trades are when someone says, "Hey, did you see what PDD is doing?" Like, no, I didn't. Oh my God, that looks amazing. And so it's kind of like human AI when everybody's kind of focused on different things like that. So that's what happens there. Over here, if there's one of the traders in the room, like one of the moderators, we have a specific trade that we're going to do. We'll post it here so you can see it. That's also what goes out to the app. So you can actually, kind of make sure that, you can get a ding, you can get all the things there. So, when somebody's taking action or somebody's posting something. And then last but not least, we're sharing our screen so you can at least see what we're looking at. And, whether you agree with it or not doesn't matter. It's just that you've got like, okay, this is what they're looking at. I totally don't agree with this, but it's interesting. That's an interesting point of view. Or it's like, oh yeah, that makes so much sense. I'm dialed in. And so it helps us to kind of understand what we're doing. And it's funny, I've told other people this. We're like, oh yeah, we do webinar, kind of like a webinar for 7 hours every day when the market's open. They're like, oh my God. But of course, you can't do this by yourself. It's because we have a team rotating through and you got to take breaks and all the fun things. Some of the things I'm looking at too is that systemizing some of the stuff, talking to a couple of groups about where you can, if you want to do a larger account and they'll back you and stuff like that too. And, there's a lot of interesting things out there, incorporating more kind of automated trading in. Anyway, that's all stuff that's kind of, we're looking at down the road here. Okay. So let me make sure that was everything. So obviously, if you've got questions about this, you can email us, support@simplertrading.com. You can give us a call. The link for this to sign up is simplertrading.com/MTT-live. The link may take a minute to load, and by a minute, I mean like 5 or 10 seconds. Part of what we're undoing from our PE firm adventure is undoing some of the tech that they incorporated that made us slower. So that's part of the learning process as well, but it will work. If you're looking at this going like, man, I want the elite package, but that's a little, maybe not quite, I wanted to spend all that on. We do have this deal with PayPal called PayPal Credit. For 6 months, you can do 0 interest for 6 months, and you could pay it then or make payments or whatever. And so a lot of people like to take advantage of that if they're like, all right, I like this and I don't want to miss out on it. And this is a way where I can actually spread it out over 6 months instead of, getting it all at once. Because I know we're all trading different account sizes. I started off, a couple $1,000s, and I always told the story of like, when I got up to $10,000, it felt like, oh my God, this is great. And then I had this crazy run where I went from 10 to 100,000 trading options over the course of like 8 months. And I was like, oh my God, this is nirvana. And then I was like, man, if I went from 10 to 100, now I'm going to go from 100 and 10x that to a million. And then promptly 3 weeks later, I was back at 10. And so that was my first lesson in trader psychology, is that when you go for the money, all the bad habits automatically kick in. But if you focus on the setups and the discipline, the money takes care of itself. I actually had to learn that a couple of times before that sunk in. I had the fortunate experience to work one-on-one with Mark Douglas for a long time. I even talked to him 3 weeks before he passed. Very shocking at that. It was like, oh, that kind of hit me hard. He was a good friend and a mentor. But it's interesting. Is the first couple of times I read his book, I was like, oh, that's interesting. But the more I read it, and it's actually better to listen to, I found that guy was so dialed into the human nervous system and how it reacts to stress, more so than I think anyone I've ever seen. And it's just like the more every time I listen to it, it's like I just realize how much understanding he had of that. And what was interesting is one time we were talking, I said, "Why did it take you like 8 years to write the book?" He's like, John, you don't understand. Sometimes I had to go for like a 10-mile run until the perfect sentence formed in my mind of the exact point that I wanted to say. And then I would go write that sentence. And then, so it was literally every sentence in there is just, it's so precise versus, somebody regurgitating something out of AI, right? It's not going to have the same resonance. So anyway, good stuff there. Any questions, obviously. And so anyway, I'll leave it on here. I'm happy to hang out and answer questions. I wanted to, the main thing with this, I wanted to show you those short-term cycle dates. By the way, in the room, I will be posting those dates as they come up, and we'll be tracking those so that, you have those as well. And what's great about them is that we can have them weeks in advance. And it's not, and it's not this magic elixir that works, 100% of the time, but it works enough that I found that if you don't know it, if you don't understand it, it's a detriment to your trading progress. Okay. So I think it's important to do that. I'll be posting my large account trades. We're revamping the room. We're bringing folks in that are kind of um, doing the technical trading, posting alerts. We're focusing on the market and truly making this a trading community and a trading room. I think it's going to be a lot of fun. So that's what we got. Oh, so Darcy, so the Mark Douglas book is Trading in the Zone. Yeah, and get it on Audible. I actually like some books I like to read. And obviously I've read his book, but I really like it on Audible. Unfortunately, it's not him reading it. If you've ever heard him speak, he's a very passionate speaker. We've actually got a 6-hour video of him talking at one of our events, which we should probably find that. So it's just Trading in the Zone, Kindle. I think you have to search for, let me see, Trading in the Zone, Audible. Yeah, I don't see it. So they might have taken it down. Wait a minute. Audible. Anyway, I'm sure it can be found on there somewhere. Tasty Trade denied my application. If they denied your, okay, look, so if they denied your application, a lot of times it's just how you filled it out. And so the thing with like Tasty and any other broker is if you go in and say, I have no idea what I'm doing and I have zero experience, then they're not going to approve you for stuff. But if you do some education first, then you say you take a couple of classes, you're in a room, you could say it's kind of like, okay, well, that's the equivalent of like 3 years of experience. And then if you can put something like that in there, and at least that can kind of get you started. And then I always say, at least that gets you in, and then start practicing on a demo account so you understand how the options move and stuff like that too. Basically, yes. Yeah, Ken. Yeah. So, Alan, that's a great question. Can you start with the basic for like a month and then move to elite if you want to? And the answer is yes. So, again, now that we're no longer owned by a PE firm, we can do things that actually resonate with the term common sense. So I think so yeah, we're not trying to make this hard. We want you to kind of say like, okay, is this something that's is this something that's for me? Because look, this isn't going to be for everyone. I get that. You got to find the stuff that kind of meshes with your own personality and things like that too. But we want to make this easy for people to try out and see if it's a home for you. And so that's the easiest way to try out. That's awesome. I am. Yeah. So, Rudy, good question. So, I have a smaller account. Can I do your big trades? So, the answer is you can do a form of them. Okay. So, as an example, if I'm doing a big trade, I may say do something like, okay, I'm just making one up here. I'm going to buy the 5,400, 5450 S SPX call debit spread for 17. Okay, well, you don't have to do that one. You could do like say the 54, 25, 54, um, 54.45, and that might be $5. Okay. Or you could do so there's a different ways to skin the cat. If you understand the idea, or you could use XSP, which is like 1/10 the size, okay, and then it's going to be $1.70. So does that make sense? Or if I'm doing, say, Netflix, a $30 wide call debit spread, great, do it $10 wide. Do it $10 wide for $2 instead of, $30 wide for $14. So yeah, so you can follow the same ideas, you just kind of structure it a little differently. What is the additional package for $9.97? Okay, good question. So with this elite package, it's what's included is the Mastering the Trade University, which we're going to offer on our site for $9.97. Okay, we haven't started promoting this yet, but it's going to be $9.97. It may be a different price, but I think that's the price I remember. It might be higher. Um, but that's included in this. Okay, it's not included in this, and it's not included in this, but you do get psychology. So that's just something to think about. But if you want to start here, and again, like I said, we're ruled by this thing called common sense and doing what's best for you at this point, versus doing what's best for EBITDA. And if you want to start with this and you like it and you want to upgrade, we can work with you. Now, if you're already in Simpler Central, okay. Now, okay. So here's a question I don't know. So I don't know if Renda or Mr. EBITDA. Yeah, I really never want to hear that word again. Um, if you're already in Simpler Central, I believe that the psychology class is included. I I don't know. I don't know if that may be an add-on. Anyway, I'm not. That's when we're looking at that too. Okay, so if you're a Simpler Central member, you automatically get the psychology class, and then if you want to upgrade to that, you can. Okay. Anyway, that's stuff we can figure out. Are the classes live or pre-recorded? So they're all going to be live, and then we record everything. So if you cannot attend it, if you can't attend it when it's scheduled, there'll be a recording for you. What hours are you on the mic every day? So we will have a schedule that's out, and it can change a little bit. We're trying to keep it. We're going to try to keep it fairly consistent, but it can change. Typically, so we all kind of rotate. So typically, I'll be on the mic 3 times a week, and but even if there's like on Mondays, I don't do a lot of trading on Mondays, so I'm not on the mic. But if a trade sets up, I'll still post it. So if I got a large account trade I want to do, I'll still post it even though if I'm not on the mic. And then what's great about being on the mic is you can actually, review setups. This is what I'm looking at, and all the fun things. And unless I'm traveling, which I was doing kind of a flurry of travel at the beginning of the year. Now you know why, because I was having to go to New York and all these places to negotiate with 4 sets of freaking lawyers. But now that I don't have to do that anymore, typically any travel that's coming up is more family travel. Typically it's done a little bit more during the summer. Yeah, and this is all Central Time. So we're in Austin and we live on Central Time. I'm new to this. A few calls and puts, no idea about credit spreads, et cetera. Is this for me? Yeah. So look, Darren, that's a great question. When I started trading, I definitely was like, okay, I'm going to buy stocks, or I'm going to buy calls, I'm going to buy puts, and I loathed spreads and things like, and like, look, if you think it's going to go up, just buy a call. Why would you sell a put credit spread? Or why would you sell a call debit spread? And then at some point you realize, like, you start to appreciate the concept of premium decay and all that kind of stuff too. So I just say, like, you'll see as we're doing trades, you may see a lot of things like an unbalanced butterfly. Okay. The nice thing about that is you don't, if you see something like that and you don't know what it is, you don't have to do it. What I would just say is if you're starting off, you're kind of familiar with calls and puts. The main thing you'd want to learn is simply um, a spread, and that's just instead of doing so say you're normally going to buy, oh, I'm going to buy a $40 call. Great. Sell a $50 call against it. That's a call debit spread. And all that means is you're simply offsetting the theta decay. And so those are things that while we do them, we're happy to answer the question. So don't feel the main thing is if you're newer, don't feel bad about asking questions. That's why we're there. That's why we're going to help. What I do find sometimes if you're newer, you might a lot of times you ask the wrong questions. You don't know it, but like I was there too. And so what we try to do is just kind of reframe like, okay, this is why we're doing this, and this is what it looks like. And if you're absolutely confused, just ask questions. And that's okay. I mean, that's that we're here. It's a community. We're here to support. There's all levels of expertise. There's people in there like slinging some huge size, and there's also some beginners, and that's great. That's we're a community, right? And you're supposed to kind of help out. And we always say in the room, we got rules in the room, like don't be an ass, don't berate other people. Let's save the political discussions for Thanksgiving. And anybody that kind of gets into that, we just mute it. Because we're there to trade. We're there to focus on let's make money. Let's focus on our own financial freedom. And any triggers or anything like that that start happening, we just mute them. Like you're not booted. You're not like you're just muted. And then so we have some people that have been muted for 2 years. They keep paying for the service because they like the trades, but we just won't let them talk. And they apologize. They're like, "Can I try one more time?" And we're like, I mean, we gave you 3 chances. Yeah, I mean, look, life's too short. All the if you want to go argue politics, go do it on Facebook. We're here to trade, and I just frankly, all that stuff it's so worthless to talk about because A, it doesn't change anything. B, it's really just an excuse for people to kind of project their own trauma onto things that have nothing to do with it, and it's just it doesn't help, right? And your subconscious mind, it takes everything you say as the truth. And if you say something like I hate this person, your subconscious mind thinks you're saying I hate myself, and then you start to start acting like that, right? And it's psychology 101. And so we try to keep it positive. Anything you say you're basically saying to yourself. So let's be an aggressive disciplined trader and kind and passionate with everybody else in your life. Oh yeah, no, and there's other rooms I'll kind of watch, and it's kind of funny, and it's just like, dear Lord. Um, yeah, that's just not our vibe. And it's if it's something where, your main thing is you like to stir stuff up, there's plenty of places out there you can do it. You just won't be doing it with us. Um, yes, so if you're a simpler central member, the good news is you're locked and loaded and ready to go. Does your wife have her own room for spouses? So the funny thing is she is she's kind of talked about it, and I think she would love doing it. She's got a kind of a master's degree in psychology, just kind of probably living with me and living with a trader over the years. She's got a lot of insights when I'm prepared to listen. Like I learn a lot, and very compassionate human being and understands all the struggles. And look, one of the hardest things probably for in the life of a trader is somebody who's married to a trader, because look, what's not every day is all bells and whistles, right? And it's like, if you have a really crappy day and everything gaps down against you, it's kind of hard to be in a good mood. And but the main thing is you just don't want to, so I always say, like, if I've had there's a difference between like, oh yeah, I was stopped out. That's not a big deal. Some days though, you can get whacked, and it takes a minute to kind of unwind from that. And so I always let her know, like, hey, I got, the important thing is, like, you don't want to get, you don't want to, the goal is if your position size is dialed in, then your losses shouldn't really do much to you, and neither should your gains. But there are times when we have like big gains, and other times it's like, oh, that loss was more than I wanted to. And then it's just being able to kind of manage that and then reset your emotional balance from there. Henry had, I don't know if it was in January or when it was, but or maybe it was after that Trump was elected, and he had his first $1 million trade. I was like, that's so awesome. I loved hearing that. And that's great. And so it's just and then some other traders are like, what? I don't want a big trade. I want to be consistent, consistency. And it's a combination of consistency and then knowing kind of when to pounce. Is it a little safer to pounce on this at this moment in time? I am new to the system. When I sign up, who do I contact to get everything set up on my charts correctly? Oh, that's a good question. So a lot of us use Thinkorswim, Tasty Trade. I know a lot of folks use Interactive Brokers. Some use Fidelity and E-Trade. A lot of our tools, I think most of our tools are, Thinkorswim, TradingView, stuff like that. If you're on like Fidelity, what I know is some people do is, if you open up a Thinkorswim account, send them $100, you can just use the platform. You don't even have to trade on it, but that way you can get all the tools and all the indicators. They don't charge you like a monthly fee or anything like that, which is pretty awesome. So a couple things like that too. Yeah, so simpler central does typically when there's earnings, we are looking at that. Yeah. We'll look at different strategies for earnings and stuff like that too. Yeah, and it's funny because I kind of grew up on TradeStation and then finally got to Thinkorswim, and this is, whatever, 2010. And now everybody's like, John, you got to get on TradingView. So I have a TradingView account. I just don't use it very much, but that's, maybe I need to have Lorna mentor me and set up my TradingView charts. I need to make it. I need to make the jump. Yeah, I mean, 2000, the funny thing, TC 2000 has great scans and stuff. Yeah, I've heard that too. Like once you use it, you never go back. And of course, sometimes Thinkorswim gets laggy and I know TradingView doesn't. And anyway, that's kind of one of my goals for this year is I'm kind of like, yeah, updating all the things that I'm using. No, well, Bob, that's a great point. Why jump in if what you have is working fine? Sometimes it's just more like learning. And I think there's some things on TradingView that you can do that makes things easier that you can't do on Thinkorswim. A few things like that. So no zero with the elite package. There's some days when I would certainly just give them away. It is cool having the animals and the critters and stuff like that, but there's sometimes I was like, okay, the zebra got stuck in the fence. That hasn't happened in a long time. We did have a zebra jump the fence. I had to order a drone. It took me 3 weeks to find it, and then you had to get it back to your place, and that was interesting. So there's certainly been some challenges I never would have expected by having some exotic animals at our place in Wimberley. So the next challenge I want to do is zebras because we have bottle fed raised a few. We have this deer named Bambi, of course. She runs out and frolics in the wild. So the other night, but we bottle fed her, so she's imprinted on me. Like I'm the one who, this is kind of gross, but the mothers, when they're done feeding the baby, they lick their butt, and that causes the baby to then defecate. Well, if you're a human and you're feeding the baby, I'm certainly not going to lick the butt, but you got to use your hand and kind of massage the buttocks area. And so during that time, they just bond on you. So Bambi runs out in the wild, but when she sees me, she will run across the field. All the other deer and sable and kudu are looking at her like, are you insane running up to that two-legged predator? And then she'll come up and dance around. She walks into the house like she owns the place. It's awesome. And she's had babies. She introduces her kids to us and she's just like, yeah, this is normal. This is great. So we want to do the same thing to a zebra. However, if you try to take the baby zebra away, the big zebras will try to kill you. So that's been a challenge. And so we're trying to figure out like, okay, we put them in a pen and then, you put on some football gear and a helmet and you run in there and you grab the baby. And it's, obviously traumatic at first, but after the first 48 hours and they got their colostrum, they're good to go. You wear a zebra shirt, they imprint on you, and then the zebra becomes like a dog. Like, they imprint on you. And so that's kind of fun. So that's on our list too. Yeah, definitely TMI. Yeah, I was the first person in history to ever ship a kangaroo to the BVI. That took a year to figure out. Nobody, government officials do not want to deal with that. So that was a fun challenge. So this is a funny story. So I couldn't, no commercial airline would take it. So I'm sitting there and I've got pictures of this, which is great. So I've got, Richard and his assistant Helen on WhatsApp. I'm like, okay, look, this isn't going to work with a commercial. So next time you have your private plane like in Miami, let me know. We can plan this in advance, and you're just going to have to take the kangaroos yourself. Oh, jolly good. And so that's what happened. And so I got pictures of them, flying on his plane, and we were down there in March, and they're loving it. Apparently, they've adapted well to island life. So That was pretty funny. Yeah, so Dan Brown is asking, can Simpler get a trading view webinar scheduled so we can why Simpler likes it better? Yes, Lorna, we just signed you up for that, so that'll be awesome. All right, so okay, it's 8:07, so let me see here. I'm happy to answer questions. I just want to leave it on here, so if you guys have questions. Is it not for me if I don't know anything except stocks? Okay, so that's a great question. There is some stock trading, but in the main room, it is definitely more options. However, this is, like the setups that I'll do are all chart based on the pattern of the stock. So like I'm a huge fan of Investors Business Daily. That's where I cut my teeth. If I see a squeeze and I see a cup and handle pattern, which is kind of a classic IBD thing, and I say, wow, I really like Netflix here. I'm going to buy calls or I'm going to buy a call debit spread. Well, if you're a stock trader, you can just buy the stock. So a lot of times on many of the option trades, you can just buy the underlying. And one of the things about buying the underlying, and I remember Henry saying this when he first did it too, is that it really makes you appreciate having something that has a delta of 1 instead of like zero point 0.5, and it doesn't decay and it doesn't expire. So there are a lot of advantages to, instead of trading 10 call options, if you can trade an actual 1,000 shares of the stock, it obviously takes up more buying power, but there are a lot of advantages to that. And so, which, yeah, I'm a fan of. Or, if you see somebody like, okay, I'm shorting the ES here, which is the S&P futures, you can short SPY. So, there are ways to kind of mimic that just using equities. Yeah, another thing too. So this simpler essential. So if you're newer and you're like, okay, I'm a little intimidated. It sounds like you guys have a lot of experience. This includes this service called Simpler Essentials, which is a room that runs that really is training throughout the day on really kind of the basic stuff. And that's where you can kind of hang out and learn. Um, and that's great. I mean, you got some amazing kind of instructors in there talking through like this is what this is and this is what this is. So if you're brand new, it's easy to kind of come into the room and just feel intimidated, like, oh my God, this guy's slinging these butterflies around and talking about stuff I don't know. And that's okay. It'll sink in. And remember too, and this is something that I always try to emphasize, is that even if you see somebody saying like, okay, I'm doing this butterfly. Okay, well, if you're newer, you're not going to know what that is. It took me forever to figure out what it was. But the main thing with the butterfly is saying, like, okay, I'm just making up numbers. And let's say the stock is at 400, and then they do a butterfly at 425. Okay, I'm doing a butterfly centered around 425. Well, all that is saying, like, you know what? I believe this is going to 425 based on what's happening, and I'm going to do a butterfly. Well, you could also just buy a call. You could sell a put credit spread. You could just buy the stock. And so understanding that the butterfly is basically a way to capture the move that's really it. And then you can do however you want. My favorite way to trade is like if I think it's going to go higher, I'm going to buy some slightly in the money calls 30 days out. And then I'm just going to ride it. Now, over time, what I've learned is, sometimes, when it works out, it's great, but then there's sometimes when it doesn't work out. And so it's like, okay, well, what are the best ways to mitigate that? And so sometimes you can restructure the trade, like a butterfly. If the stock falls, the butterfly doesn't actually lose much value, which is kind of cool. But so anyway, I always say stick with what you know, gradually add additional tools to your toolbox if they make sense. One of my trader friends of mine, he hates options. He'll never trade an option again, and he just does stocks. And he likes to average in, and he'll do start off with 1,000 shares, and then he'll add in as it goes against him to 2,500 shares, and he'll build up like a 10,000 share position, and he does reversion to the mean. It works great for him. And he's just like, he's just not interested in options at all. I'm like, well, if you did options, he's like, shut up. I don't want to hear about options. Like, okay, and that's great. That's what makes trading. You do the things that make sense for you. So the top 10% of the traders that get your concepts, what kind of returns do they see? So that's a great question. So returns are based on three things. So one, they're based on position size in relation to your account. So here's a rule of thumb. If your goal is to say, I want to earn, I'm looking to make 20% a year. Let's just say that's your goal. I want to make 20% a year. Now, for most traders, that's way too low, just FYI. Well, then you dial in and say what you're going to risk per trade is 1%. So whatever your risk per trade is, you multiply that by 20 to get your projected return. Okay, so if you're going to risk 5% a trade, it's like, oh, that's kind of risky, but it opens up the door to 100% return. All right, so that's kind of the first thing, kind of ballpark. And again, that's very ballpark. But from there, if you don't have structure, if you don't know exactly what you're going to do when you get into a trade, and if you don't have the discipline to do that, it doesn't matter. This isn't going to happen. Okay. So that's just kind of a guideline. And then from there, you can just say, all right, does that make sense? So the traders I know that do well, it's when they have the tools and then they have the discipline to execute. And that's the hardest part because sometimes I've looked at a lot of trader statements and a lot of times, like you look at a quarter and they had a great quarter except for that one trade and that one trade that just hammered them because they lost their discipline. They kept adding to it, adding to it, adding to it, and it plunged. Imagine if you were buying the dip with no stop, like 3 weeks ago. You just got obliterated. So that's what it kind of looks like there. But so you dial in your risk, get setups that you feel comfortable with, and what happens typically is over time is as you get comfortable with setups, maybe you start off with 1% risk, and you're like, wow, and this is what Mark Douglas told me. He goes, look, journal and keep track of 25 trades in a row, and he would hammer. He'd get mad at me because I would push back on it. He's like, I'd say, well, you know, he's like, you need to follow the setup exactly for 25 trades in a row. I'm like, well, what if, blah, blah. He's like, no. Exactly. Lay it out exactly because then after 25 trades, you're going to know if you have a winning system or not. And after 25 trades, if you gave it good data, meaning you followed your plan every damn trade, no intuition or anything like that. And then like, wow, based on, 25 trades, this was my success rate. This was the total amount of money I made. Then you can dial it up. But if you don't do that, you don't know if your system works or not. Okay. If that makes sense. So just things like that. The little things. Should I switch to other trading platforms since I'm currently using Fidelity? Okay. So Gigi, that's a good question. So you can still execute on Fidelity. Our indicators, we don't have an agreement with Fidelity. And we just, for whatever reason, I mean, it's just, the brokers we've grown up with are, typically like Thinkorswim or TradingView. And so this is what a lot of people do is that they will open up a Thinkorswim account with Charles Schwab, put in like $100. Okay. Then you can get all of our indicators and download them onto that platform, and then you can watch them and still execute on Fidelity. Now, you may want to execute on Thinkorswim, and that's fine, but you don't have to. So we're broker agnostic. We don't care who you use. But that's something that I found that a lot of people do. They're like, well, I really like my Fidelity account. And that's fine. That's totally fine. Yeah, but if you do start doing it, but you may, and there's a reason we use Thinkorswim. We like, Tasty Trade is actually great if you're really, if you do a lot of option trades, it's super fast. A lot of people use interactive brokers and things like that too. The intraday levels, yeah. So kind of like anything, the larger the time frame, the more powerful they are. So the 2 hour and like 4 hour quant pivots, they work great on quiet markets. So I would say that they work great when the VIX is under 20. But when the VIX has been like it's been over the last 6 or 7 weeks, you got to go out to the daily levels, and those are great. Yeah. So if you're looking to replace your income, what kind of do you recommend? Do you recommend zero DTE spreads? So believe it or not, I do not recommend that. So I think if you're looking to replace your income, you want something a little bit more conservative. Um, Zero DTE is a little bit of here's the nice thing about it. Zero DTE is sexy, but you can go 3 DTE. If it's Tuesday, sell a spread on Friday. So, if it goes against you, it's more forgiving, different things like that. Does that make sense? So, and I'm a fan of that. So some of the things I do in my larger account, yeah, I'll do some zero DTE, but you got to watch those. And but if you do like one or two DTE and stuff like that, you get a little bit more wiggle room. And again, at the end of the day, it's not about being right. It's about, making your goal. I've tried a lot of different things, so I'm pretty well versed in like what you shouldn't do, especially as a beginner. But also the thing about it is trading is great is you can know a lot, but that doesn't mean you have to do a lot. Yeah, I know a lot, but you can know 28,000 different things about trading, but you just focus on the two that work for you. That's really it. You don't need to be, a master of everything. You just, or, jack of all trades, master of none. My favorite is like, I know a couple of traders, they trade for 20 years. They trade one market, one time frame, and one indicator. And one of them told me, he's like, look, all this stuff, if you get one market, one time frame, and one indicator, work with it for 6 months, you're going to have a system that you can use the rest of your life. There's a lot of wisdom in that. And so, I certainly watch the SPX a lot because, it's a broad average, all the things. So I'm always watching that. And then, there's definitely setups I like to look for on individual stocks. And, but you don't have to do everything. At the end of the day, if your goal is to make $1,000, it doesn't matter if you make it from GLD, SPX, Tesla, Netflix, put credit spread, long call, out of the money call. It doesn't matter how you make it. It's just what's the most consistent way to make it. Yeah, no, and there are definitely advantages to zero DTE. So don't it just if you're starting off and you're like, oh, I think I'll start off with zero DTE, it can bite you because especially at the end of the day, all of a sudden you blink and your position goes to max loss, right? So just things like that where you kind of ease into it, right? You can start off learning the two step and and then you can, start twirling if that analogy makes any sense. Thought about 30-day way out of the money puts and calls in this crazy market. The thing about it, Caesar, when the VIX pops up like this, just think about it. The market's already priced in. So, like if you bought an out of the money call 2 weeks ago, like at 5,800, even though the market's gone up, you've lost money because the VIX has plummeted. So, so, um, so believe it or not, I think it's better to kind of, we just had a lot of volatility. The volatility is coming back in now. So it's really, a little bit more closer to home. About how many trades do you post in a day? So it depends on the day. So Monday, I try not to initiate new trades on Monday. Monday, typically I look to, if there's anything that's hitting a target that I held over the weekend. My favorite day to put on new trades is Tuesday and Wednesday. And then sometimes, especially like if there's, monthly expirations and things like that, I'll do a lot of stuff on Thursday. So typically like new trades Tuesday, Wednesday, maybe Thursday, and then Mondays and Fridays, typically more exit based kind of stuff. Yeah, and John, at the end of the day, it's like if you think of it this way, and let's say your goal is over the course of a month to make 10 grand, would you rather do, 58 day trades to make that 10 grand or two swing trades? Right? Because it doesn't matter how you make it. But it's like at the end of the month, are you, your eyes bloodshot, are your adrenals, lagging? So it's just finding what works for you and, especially what's going on in your life and stuff like that too. This is the first I've heard of the haddock cycle progression. How long have you been following it? So I've been following it for 12 years. And I would say that I kind of had it, off to the side and I would notice it and like, I kind of ignored it because I remember there'd be times when I'd watch it closely and then I'm like, whatever. Um, and then I just kind of started like noticing it. And I just started, and sometimes it's like you got to learn how it works too. And so I've just kind of learned to absorb like how it works and what to look at. And so yeah, so what I do then is just when those levels kind of come up or those timing comes up, I'll throw like a vertical bar on my chart just to remind myself. And I'm happy to do that and share it in the room and just kind of talk about how I'm doing it. But, I have found, so, during February and March, I was busy flying around, negotiating with four sets of lawyers, all that kind of stuff. And so, I was kind of paying attention to it, but kind of not. But it totally nailed everything that happened in the market. And so that's one of those things where it's like, yeah, it'd have been much more profitable for me to be focused on that versus, flying around doing Zoom calls. But of course, I'm glad. Like, I think it worked out. It was again, interesting trade, right? So it's things like that I found where you get these quote unquote out of the blue moves. It kind of nails it. And of course, the way journalists work is they have no idea why markets move. And so if you're looking at headlines, the markets are going down. It's all because, oh, tariffs this, tariff that. Actually, the cycles project. They said, they were talking about this 4 months ago. Now, the news can facilitate that, but whether or not the news was happening or not, so maybe it went down further, a little further than it was going to go because of that. But the cycles are the cycles, and so, but the news is always just like, oh, the best example I heard is, when this was Apple a long time ago, way, before it split, it was like 700, it went from 400 to 700, and every time it was up, all the news was like, the entrepreneurial cowboy culture here, it's differentiating them from other companies, and that's why they're doing so good, and that's why it's up, 10 points today. And then they went from 700 to 400. Even though the business hadn't changed, only the market environment had changed, but the business hadn't changed. The headlines were Apple down today because cowboy culture getting in the way of, no. They don't know. They don't know anything. And so, and this is one of my mentors is Peter Borish. He was the head of research for Paul Tudor Jones. I got to spend some great time with him. And one of the two things he always kind of said is discipline before vision, meaning you may have this vision that the market's going to go straight up or straight down, but have the discipline to have a stop in place in case you're wrong. But the second thing he always said is first price, then news. And yeah, there's certainly news that's going to move the market. Earnings news moved Microsoft, it moved Meta, it moved Amazon, it moved Apple. But in general, first price then news, meaning if gold's up, the news is going to reflect that. It's not like the news isn't driving up the price of gold. Gold is moving up, and then the news is reacting to that. So first price, then news. And so it's always important to remember that, to not take the news too seriously. Certainly, that's one of the things I appreciate about the cycles because the news is irrelevant. Like it doesn't matter. You can save a lot of time by just not reading it. Oh, thank you. Yeah, thanks, Bruce. Yeah, and I appreciate it. And look, I'm so excited to kind of be like, it's hard. I know I'm a trader first, and of course, I kind of got onto this entrepreneurial journey, and I'm an EO and YPO for those of you that are familiar with that. So a lot of other entrepreneurs there, and they've had different things and worked with PE and stuff like that too. And that's not ever something I thought I would do. It happened, and kind of made me realize at the end of the day, it's like, look, I just want to trade and build a community around trading. If I have to look at another financial projection, I'm gonna have a fifth of bourbon every night for the rest of my life, and I just that's not a path that I wanted to go down. So at the end of the day, it's like let's just kind of hang out and trade and make money and do stuff that common sense stuff and have fun. Make trading and simpler fun again is like absolutely the watchword. Yeah, John's just saying I've always struggled with the psychology of the trade. So a little trick there is what'll happen. So there's two things that happen. We're kind of a mental construct. If we're unaware, if we're unconscious, which a lot of us are throughout the day, by unconscious, what I mean is you're just, we're kind of moist robots, right? Just kind of reacting, emotional triggers coming up, and that can kind of take over. And in a trading environment, if you're not mindful, if you're not present, we just become, who we become is simply a result of our last two trades. And if our last two trades were winners and we're feeling euphoric and all that kind of stuff, then we start taking trades without, accounting for risk. Like what could happen if it goes wrong? It's not going to go wrong because I'm a trading god. I just had two winning trades in a row and I feel great about myself. Then boom, you get whacked. But the other side of that is that, if your last two trades were losers and you're not present, you're not mindful, then you're operating on fear, and then you're not going to take the next setup because why? The last two didn't work. And so the thing about the two tricks here is one is to instead of focusing on the fear of the unknown, is just to focus on the risk of the unknown. It's like, okay, am I willing to risk $500 to see if this is going to work? So that's one way to do it. And then the other way to do it, and this is something Mark Douglas had me do, and he's like, look, twice throughout the day, because it's like the longer you stare at charts, the worse you're going to get because you that breeds impatience. And if you're impatient, you're going to make stupid mistakes. But he's like, he suggested twice during the day that you close your eyes for 5 minutes, set a timer, and just count from 1 to 5 and 5 to 1. 1, 2, just breathe and count. And for 5 minutes, and that resets your emotional and psychology base and gets you present. So you're just focusing on what's going on. The other thing I like to do during the day is I listen to, there's a YouTube channel called Mind Amend, and it plays music that kind of dampens your reptilian brain. So meaning that, as humans, we're unconsciously scanning at all times for danger, food, sex, potential mate, and that's just an unconscious thing. But if this is so Mind Amend, it plays music that just kind of turns that off. So you kind of chill, you get present. This is one I like. Um, I can I can post this link, but it's just it just kind of turns. I don't know if it makes your theta waves or turns off your alpha waves. I forgot what it was, but you just kind of chill out, and I think that stuff like that is helpful. It's all the things. Now, if your system, the more disciplined you are, the less you need stuff like that. And so I think it's always also important to remember, like if you've got your trading plan really dialed in to the point where it's mechanical, the psychology part kind of takes care of itself. But I'm actually a fan of discretionary trader. I mean, a mechanical system over time can have smaller, more consistent wins, which is 1,000% the point of trading. But if you've got some discretionary to it, you can kind of take advantage of unique opportunities. Oh, this is a short squeeze in Tesla. I'm going to go in bigger and hold on longer, that kind of stuff. All right. Well, it is 8:30. We have spent 90 minutes together. I hope it was useful and helpful. I'm looking forward to anybody that's, again, if you're in Simpler Central, awesome. All this stuff you're already in, you're already included. So just kind of, we thought about starting a separate large account service, and we thought about, and again, PE firm was like, yes, you should do that separately because that'll mean more revenue. And we're just like, you know what? Our Simpler Central folks, that's our core. Let's just do it in that room and they get it already. That's common sense. That's what we want to do, more of that. And then if you're not a member, this is a great time to get in. We're kind of locking in some kind of introductory rates here, throwing in a lot of good stuff. There's going to be a lot of opportunities the next couple of years and want you to take advantage of it. And we feel like we've got a really good community. We can show you how to do it. We can show you what we're doing. We've got a lot of collective experience and, looking forward to taking the journey together. Yeah, back to basics. All right, I will leave this page up for anybody that still is looking at this and wondering what to do. We can hang out a little bit, typing, answering questions. I'm going to sign off. It's 8:30. Trying to decide if my kids want to go. Somebody mentioned, I guess there's some, I forgot, there's some movie coming out tonight they wanted to go see. I'm like, really? Maybe on Friday? But looking forward to tomorrow, Friday. We got employment data. We're going to see how Apple and Amazon react after earnings. We see what they're doing tonight, and see if is Tesla going to rally on Friday like it usually does. All the fun things, and looking forward to doing that with all of you. Have a great night. Thanks for joining us, and good trading, everybody. And congratulations on your freedom. Thank you. I feel like I've lost about 1,000 pounds in a good way. All right. Have a good night, everybody.